Vikas Khemani joins us now. Let's take our conversation forward. Vikas, good morning. Thank you for joining us. It's been a steady comeback by the market. Do you think the worst of the fall is behind us?
Hi, Nikunj. Good morning. I think whatever corrections we saw was primarily led by some of the reallocation of the foreign money towards China within the emerging market basket. I broadly think that that's by and large behind. I think what this correction has done is kind of reset some of the expectations of participants, which is good. Uh, and I maintained throughout the fall also that I don't see a deep correction in the market. We saw a 10% kind of drawdown from the peak, which I think is a very par for course kind of correction in this kind of market. So I continue to believe that we are neither in a very weak spot or nor in a very strong spot. So market will probably remain within the range around of 22,500 Nifty to 25,000 in and around. And that's the kind of market probably you might see in a 3 to 6 months kind of range. And within that, of course, sector rotation, stock specific activity, those will continue. And that's the kind of characteristics of market probably we are in. And I do believe that this kind of time correction as well as the value correction, the consolidation is very good in markets like this, especially when we are coming with on the backdrop of such a great period.
Have mid-cap stocks and small-cap stocks corrected enough, Vikas? Because once upon a time they were expensive. Now everything is down 20-30%.
So again, like I would say, broad brush mid cap probably I would say there was lots of pockets of exuberance. Many of them have even corrected 40-50%. And there were mid caps and small caps which have not corrected at all. In fact, they are closer to not all-time high. So it again really depends on where there were pockets of exuberance, where are the real sort of stories, and we have continued to believe that rather than looking at a broad-based mid cap basket and calling them out, I think keep focusing on looking at the individual stories, stocks, managements, and remain invested. Excesses have to some extent got corrected. And wherever there was froth, probably might get more corrected. But generally speaking, I continue to believe that I don't see a very widespread euphoric froth in the market across the board.
But Vikas, is it fair to assume that that 12-14% kind of gains that we usually see at the index level on a CAGR basis is likely to continue this year as well, or do you think we should temper down our expectations?
I think see again from a short-term perspective, nobody can call out, but I do believe that India can deliver 14 to 16% sustainable CAGR over next 5 to 10 years and maybe more. But even from next to 2 to 3 years perspective, but calling out in a 1 or 2 quarter, there are lots of factors play. Directionally speaking, I am not bearish on the market. Directionally speaking, I am positive in the markets. And essentially, then you got to look at the pockets of the companies, businesses which you like and remain invested. People who remain invested will create wealth. People who trade in and out may not create wealth. And that is the kind of nature I will continue to recommend.
Okay. Where are you picking your spots after the correction? What do you wanted to always buy suddenly after the correction, time-wise and price-wise is looking attractive?
Generally, broadly speaking, nothing changes except that I think, in my opinion, where we found good, bets on, especially PSU banks and some of the banks where, without much change in the business, dynamics, you've seen good 40% kind of 30 to 40% kind of corrections. We find that pocket very interesting, and that's where we've done a little bit of shopping. Other than that, I think we are more focused on individual names where we were very, very sort of positive. We bought some companies in spaces like CDMO, where we could see some decent correction. So again, goes back to some of the consumer names we have picked up, where we could see almost 30% correction in some of the names, and we have added them. So we have not made a lot of changes in our portfolio, but we have kind of either added some of the existing names which we like got corrected, or some of the sectors which I just mentioned we have done. But broader story does not change. There's a great opportunity in manufacturing space. There's a great opportunity in financials, great opportunity in consumption, infrastructure, and IT. IT we have kind of added in the recent fall, where many people were not very bullish. But so I think our thesis has not changed around India. That these kind of tactical corrections only provide opportunity to continue to play on those theses.
You You talked about consumption, Vikas, and the jury is out when it comes to the BPC category or the beauty personal care category, because of course, while that entire women participation is increasing in the workforce and the fundamentals continue to be strong, there are those issues that keep on creeping up. Case in point being Honasa, which saw that sudden downtick. Today itself, that stock has recovered 8%. Do you think that any dip within this category, whether it's Nykaa and the others as well, is a buying opportunity for the long term?
Look, again, this category is a great category. As like you rightly said, women workforce increases as premiumization happen. All the category will do well. I will not kind of say that category doing well and necessarily means that companies will do well. So you have to segregate and identify companies, individual, matrices, models, and potential. So I would just stop it there and saying that evaluate in that. Currently, we have not bought in any of the names which you mentioned.
Why is that? Are you looking at buying then into some of these names? Because there was a decent correction, at least on Honasa.
Again, the correction from a 100 to, I would only say that we are not finding this still attractive. We still believe that profitability matrices is far away, and we have not been able to convince ourselves still on the valuations. Companies might be great, but we have to look at the risk reward from the perspective of upside, considering the valuation as well.
And is valuation conundrum also there when it comes to companies like Paytm and Ola?
Absolutely. I think we recently, when the stock corrected, we had bought Paytm, where we find, which is there again, public domain, where we find good turnaround is happening in the business. There's a path to profitability taking place. So we find that, and it's a very, post all the regulatory issues settling down, there was a good risk reward for some time, and hence we had bought. Other than that, we haven't bought any other name.
So what's the theme for 2025? Could it be comeback of financials? Could it be comeback of PSUs? Could it be extension of rally in defense and manufacturing? Where are next 12, 18 months headed? Because a lot of news flow in terms of calendar events like elections, both global and local, that's over.
Absolutely. And I think so. I think probably we will see a good sort of balanced market. And like I said, we are quite positive on the banking space. We think this last 6 to 8 months, banking as a sector probably has not done so well compared to broader market. So that can do very well. Pharma can do very well. CDMO space can do very well. To some sort of consumption name will do well. So again, you got to look at but broader category wise, I think financial and pharma is something I would say broadly should outperform broader markets. Even we are quite positive in the IT space as well, where we are, we hold quite a bit of position.
Why do you like IT? Because these businesses are still growing at 7, 8%. You can charitable and say 9, 10%, but there are a lot of other sectors which offer better returns and perhaps higher growth.
Again, saying, like I said, the sector might grow at 7, 8%, but there are companies which are growing at 18, 20%. Many of our companies, like e-clerks to Science to, LTTS to Newgen, all of them have grown superiorly well than industry. So you got to, again, like I said, that, one is sector narrative and second is to identify companies which are kind of growing faster within those narratives. And, these are the great businesses, cash flow generative businesses, great superior ROEs, very highly moated businesses. So, in fact, many of them trade cheaper than consumer names, where I think probably similar kind of matrices are there. So, the way we look at it is that I think those businesses we want to continue to remain invested, and they are definitely growing faster than the consumer, many names which I just mentioned. So I think again, one is broader narrative, and secondly, within broader narrative, there is a detail. And actually, real money is made when you look beyond narratives and in the details and data.
Sure, you talked about financials looking good, but if I can ask you, Vikas, to narrow down your view a bit there, because of course it's very large, right, from insurance, NBFCs, PSU, private, even financialization of savings team with respect to brokerages and AMCs. What within the BFSI world are you liking?
Like private sector banks, we like public sector banks, especially right now, PSU banks, we think there's a good risk reward. We like insurances. We own life insurance specifically in our business. So again, these are the categories within insurance, both general and life, both under-penetrated category, both have, significant growth ahead of us. So these segments we like, and within that, of course, you have to identify companies, but some of the capital market oriented plays, I feel in a shorter term or medium term have kind of little bit overplayed. So you might see low return in that. But banks and insurance is something where we can see from next 12 to 18 month perspective good returns. Though structurally the whole basket is in good, but these I just mentioned from a medium term perspective, you could see some interplay of returns.
What are you staying away from, or what have you trimmed in the recent past?
Frankly, I think again, not a structural call from a trimming perspective. At a company level, we end up taking sort of calls wherever we think that things are played out. We bought Ola Electric on listing, and when it went to 130, all we had sold within kind of 10 days time. So we thought a lot of it was captured. So again, these are more kind of, I would say, tactical calls, but structurally, we are not bearish on anything. If you ask me from our portfolio.
No, sorry. So I didn't get the Ola story right. Talk to me a bit more about that. So you bought it during the IPO phase, then you sold it off, and now in the correction, you did not buy it again, right? Or you bought it again?
I think we have not bought it because we didn't have cash. We deployed somewhere else. So obviously, you have to look at the portfolio compulsions as well. So, but yeah, I mean, and it definitely became around IPO price. It is quite attractive and an interesting play. I think risk reward favors. So we had our one cycle right, fortunately, though we didn't anticipate to do this so fast. But when something offers faster than what you expect, you better take it off. But yeah, it's a good franchise, and one should keep a watch on it.
Okay, good franchise. Keep an eye out on it. But once it does reach those intended price targets, don't be shy of booking profits, because ultimately that's the game as far as capital markets is concerned. Thanks, Vikas. As always, a great chatting with you and great insights on some of those individual names as to how you're thinking about those.
If you like this video, then like, share and subscribe to ET Now.